Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Monday, July the 18th. The year's 2022. Let's talk trading. Setting your limits. These videos are for educational purposes only. Your results may differ from mine. Setting your limits. What am I talking about? Well, in trading, you get to control a few things. You control when you trade. You control how long you trade. You control how much you lose. You control when you take profit if the market gives you the opportunity to take profit. So, you control your stop loss, position size. So let's just think about setting limits. So let's say you open your account. Now you want to begin trading. So the first question is, how big do you want to trade? Well, let's say you have $1,000 account. If you traded $1 a pip, then that would be 1/10 of 1% of your account. Because a $1,000 account, $10 would be 1%. So if you're trading $1 a pip, and you make 20 pips or $20, you just increase your account by 2%. Now, let's say you set your stop loss at 10 and you lose, you've just lost 1% of your account. So you see, it's important because let's say you decided, oh, I want to trade a full lot. I want to go for $10 a pip. Well, if you lose 2 pips, you just lost 2% of your account. And if the market happens to flash against you 20 pips, and let's just say you didn't put a stop loss on, now you've done some real damage. You've lost $200 or 20% of your account. So that's why I talked about, you got to know your limits. You have to set your limits. Let's say you start trading at the New York Open. Do you want to trade up until New York takes lunch? You want to trade after New York takes lunch? You want to trade for an hour, for 4 hours? You got to set that limit and stick to it. And one of the things I was thinking about also is, say you got to know when to hold them, fold them. You got to know when to walk away from the table. Maybe you set a daily goal. It's like, if I make my 10 pips, I'm done for the day. And you see, the thing about trading is, it's not the trade that you're in. It's the overall aggregate of trades. And sometimes it's easy to lose sight of that. Trading's a long game as opposed to a short game. So for example, if you were trading the Walmart method here and you happen to go short at the 70, you may have gotten your fingers burned. But if you turn right around and went long at the 80, you got paid off. So in that particular case, you might have won one, lost one. You might be even, you might be slightly ahead, depending on where you placed your stop loss and whether or not you've already taken profit. So, once again, your limits, those are up to you. I can't tell you what to do. I can tell you what I do, and then you can glean, maybe you glean something from it, maybe you don't. And so, for example, I would have a 5 pip stop loss. And it's funny because I think I have 3 active brokers right now, 3 active accounts. And on the one account, the spread is sometimes a pip and a half. So that only gives me 3.5 pips of wiggle room before I get stopped out. And so knowing that, I have to be pretty accurate with my entries, because if I get in just a couple of points too late, that could be the difference between the opportunity to take, a 0.5 pip profit if that's all the market moves in that direction before it starts going the other way. And I know there'll be people, some traders out there that, kind of laugh at the idea of just making a couple of pips, but that's okay. I'm trading my game, which is something that every trader has to learn. That they can't be concerned about what other people say about their trading, because usually what will happen is they'll come in, somebody else look at how somebody else is trading, and they want to change everything. If somebody asks me and I see they've got a bunch of squigglies on the chart, I'm going to say, you need to start over and get rid of all that nonsense. But that's just me. And so for them, really the first question I would say is, are you making money? And if you are, I would say, don't change a thing. But if they're not, yeah, I tell them, what are you doing here with these squiggly lines? So in part of the limits sometimes is pushing your luck. Let's say you're at your goal of 10 pips, and then you say, instead of shutting down, because maybe you made that 10 pips in 1 hour or less, maybe you go, I'm on a roll today, and you enter that trade, that next trade. Maybe you enter it according to plan, maybe you airball it. Either way, it goes against you. Now what are you going to do? Hit your stop. Maybe it wiped out your profit. Maybe it wiped out half of it. But now you're slightly upset at the market. Maybe you're upset with yourself. And then you keep trading. And of course, things start to spiral in the wrong direction. You go on tilt, and the next thing you know, you're down 10 pips, you're down 20 pips. And as you can see here, price is just dropping. Now it seems like it's going back. But it's, sometimes when you look at a chart like this, you can see opportunities. Say, for example, if you happen to be awake and price hit the launch pad and it ran up 10, 20, 30, 40, 50 pips, then it came back 10, 20, 30, almost 40 pips. That's why you have to take profit when you can and not let what happened after you exited affect you. It's almost a good idea after you exit the trade to get up, walk away from the screen, do something else, and then come back a few minutes later. Yeah, you might miss an opportunity, but then again, it might keep you from thinking, oh, if I had only, because you might come back and just focus on where price is at the moment, and you look for the next trade. And I know it's easier said than done, because just as we spoke, I think price had gotten down to 5 and it's just moved right back up. In fact, we could just take a look here. Yeah, it pulled back and then it just turned right back around. Oh, and if you're wondering, these aqua colored vertical lines, that just marks inside bars, and the magentas mark outside bars. So you can see here on the inside bar, if you would have taken that trade, you could have picked up maybe 3 pips there. And on this one, let's see, right around 85, you could have picked up maybe a pip. And if you're wondering, this is just showing me the open of the hour. That's the price meter. Notice we've got a nice huge range here today. I think in last night's video, I had mentioned that, the previous day was an inside bar. We had broken this high. We had broken this high, and then price was pulling back. But you can see since then, price has taken off. Headed inside bar on Friday. Once again, we broke out of that. We're below the yearly open by 1,527 pips. Showed you the inside bar. And the ranges, pound New Zealand over 200 pips. Buy zone at 1, possibly 2 opportunities. Red rats need to get ready. But I would be careful, because this could be one of those 200 pip days. We took out the weekly, but we missed the daily pivot. Same as last night. Missed that daily. So now looks like we're going to have a missed daily for this month. So we've been missing pivots a lot this year. But as you can see, if price starts to recover, get back to that yearly open, we'll wipe out all of these pivots. And fellow traders, that's it. So it's not what you trade, it's how you trade it. So go out there and drain the banks. Over.